Greetings and welcome to Chapter 9, Problem 20. Since you guys have been hearing my dogs so much, I decided to show you a picture of them. And this is what it looks like when I tell them to be quiet. They just sit there and laugh at me. So, children are. Okay, let's get back to work. Um, instructions. Basically, we're going to have to mark what fund it's for. Okay, and your journal entry number should correspond with the number that it is. So we have our transaction number, which is going to be 1. Um, the city council adopted a general fund budget for the fiscal year. Revenues were estimated at 2 million and appropriations at 1990. So this is going to go into what fund? The general fund. Okay. And what we're going to do is debit estimated revenues, credit appropriations. So we're estimating revenues of 2 million and we're estimating our appropriations of 1990, and there is a difference of $10,000. So we're going to call that budgetary fund balance. Okay, and that all comes from right up here. And then the difference we plug to our budgetary fund balance. Number 2, property taxes in the amount of 1.94 million were levied. It is estimated that $9,000 of the taxes levied will be uncollectible. Okay, so we're talking about journal entry 2 here. And this one's also going to go into the general fund. And we levied taxes receivable current. Okay, and then we have our allowance for uncollectible the allowance for uncollectible current taxes. So again, we know how much the property taxes are. 1940. Okay, and then the allowance they told us is 9,000. Right? So what does that mean? It means that we're going to have revenues of the difference between what we levied and our expected uncollectible. So we got revenues of 1931. The next entry we're going to do is going to take place in the Governmental Activities Fund, and going to be pretty much the same, right? Taxes, receivable, current. Allowance for uncollectible current taxes. and then general revenues. Okay, so I'm just going to copy this down here to save some time. And then down here is going to be the general So again, we got the 1940. The 9 is going in there. How about 1940? There we go. And then the difference between those will be the property tax revenues, which is the 1931. Boom. Okay. So we got that one done. And again, it's just pretty much copying what they give us. Number 3, a general fund transfer of $25,000 in cash and $300,000 in equipment with accumulated depreciation of $65,000 was made to establish a central duplicating internal service fund. Well, to start off with, we know this is 3A, and we know we're going to start off in the general fund, right? Because we are going to have other financing uses interfund transfers out. And then we're going to hit cash for $25,000. Okay, and that's what it tells us right here. General fund transfer of 25 in cash. And then the equipment and depreciation, blah, blah, blah. So this is going to show up in the internal service fund, right? Because that's where we're transferring that money to start the internal service fund. So again, here we transferred cash out, so that means we are transferring cash in here, correct? And then we're going to debit equipment. Fingers don't seem to want to work today. So equipment, and that's going to be for how much? Yep, the $300,000. And then we're going to hit accumulated depreciation. And that's going to be the 65 that they told us. And then we're going to have other financing sources, interfund transfers in. And that is going to be the difference between the 25, the 300 minus the 65. So that's going to be 260 is our other financial sources, interfund transfers in. Okay. Number 4. A citizen of Linwood donated marketable securities with a fair value of $800,000. The donated resources are to be maintained in perpetuity, with the city using the revenues generated by the donation to finance an after school program for children, which is sponsored by the Cultural and Recreation Function. Revenue earned and received as of December 31st was $40,000. Okay, so what are we going to do here? We're on number 4, right? So we got, this is going to go into the, what fund is that going to go into? That's going to go into the permanent fund. Okay, it's the permanent fund because the, what am I doing here? It's going to be the permanent fund because the donation of the $800,000 isn't going to change. Okay, so that's going to be the investments of marketable securities for $800. Okay, and that $800,000 is going to remain in that fund. The only thing we're going to spend out of that fund is the interest that was earned on those securities. Okay, so now we're going to have revenues, contributions, for endowment. That's going to be 800. We can kind of short this one down so it'll fit. I hope you guys can hear me okay, because I know I mumble a lot, like when I'm talking to myself, which I do sometimes while I'm going over these problems, and you're probably thinking, oh, he's talking to me. It just might be myself. I don't know. And then revenue earned and received as of December 31st was $40,000, right? So we're going to get cash, and we're going to have revenues. Revenues, investment, earnings. And that is going to be 40,000. Okay. And then we're going to go to the okay, so that was a permanent fund. Okay, and then this here is also the permanent fund, which we're going to have the other financing uses, interfund transfers out, and then we're going to have cash, and that's going to be the $40,000. Okay. Okay, so here we're back. Other financing uses, and then cash. And then we're going to have the service revenue fund. I believe that's what they called it here, right? SRF, Special Revenue Fund. Yep, Special Revenue Fund. And in the Special Revenue Fund, we're going to get some cash, and it's going to be other financing sources, interfund transfers in. So from the permanent fund to the special revenue fund, we're going to transfer that 40 grand. Okay, any questions at all so far? Not that I can help you real time here, but you can shoot me a text or an email. Let me see here. So now we are talking about the general activities or the governmental activities fund. And that's going to be investments, marketable securities, then we're going to have our general revenues, contribution for endowment. And that is going to be the 800 and then also in governmental activities we're going to have cash, we're going to have the program revenues, culture and rec, operating grants. Operating grants and contributions. So let's wrap that. Okay. So we got the cash and then the program revenues, which is going to be the $40,000 cash. Okay. So remember, where's it going? The permanent fund. This is always going to be in the permanent fund. You cannot touch the original contribution as it was stated. The revenue that the permanent fund made was $40,000 in interest. And then also in the permanent fund, we have other financing uses, interfund transfers out, and we credit our cash, and then it goes into our special revenue fund. The cash goes in there, and then we have our other financing sources, interfund transfer in. Okay. And then the governmental activities is going to keep track of the total. It's going to have an investments, general revenue, contributions for endowment, and then we're going to hit cash with the program revenue of 40. Okay, so that's what is laid out in that. Again, don't panic on these, just think it through. Okay, like right here, we need the money to go to the special revenue fund, right? And so we transfer the cash out to the special revenue fund. Okay? So try not to panic on these. Just think your way through them and you'll be okay, I promise. I wouldn't lie to you, would I? All right. So I probably would. So the next one is going to be what? I don't know. Let's read it and find out. The city's utility fund billed the city's general fund 125 for water and sewage services as of December 31st. The general fund had paid $124,000 of the amount billed. So this is entry number 5. and that's going to go into the enterprise fund, and we are going to debit due from other funds, and that was that full 125, right? Because that's what they billed them. And then you're going to have your charges for services, and then so here we send the bills out, and it tells us also that they paid 124, so we got cash, and we're going to reduce our due from other funds, and that's going to be for the 124. Okay, so you can see that due from other funds was 125. We subtracted 124, so in due from other funds, they're still due $1,000. Now we have to do the general fund side of it. So for the general fund, we're going to hit expenditures, for the 125, and then we're going to hit our due to other funds, right, for 125. So then you look at it, right, due from other funds is due to other funds, and then we deducted the 124, so that means we have $1,000 left, right? And then we're going to hit due to other funds, F-U-N-D-S, due to other funds, for 124,000. Too many zeros. 12, 40, 1, 2. Okay. So remember, we paid that 124. So that's going to show that we paid that 124 to the enterprise fund. They billed us, we paid them. Everybody's happy, happy, joy, joy. Now we have to think about the governmental activities. And in the governmental activities, we are going to have expenses, general government, internal balances, and then cash. Right, expenses, general government. I'm sorry, that, over enthusiastic in my typing. And that's not cash, I'm sorry. Expenses, general government, and then we're going to have our internal balances. And that is for the 125 expenses, general governmental, internal balances, 125, 126. Okay, and then also in the governmental activities, we're going to get rid of that we're going to get rid of that internal balance. So we're going to hit that with the 124,000. So again, in our internal balances, we started out with 125, took down 124, so there's $1,000 in there that we still owe. Okay. I hope I'm not going too fast, but at least the positive on this is that you can pause it, rewind it, refigure it out. Okay. 6, the central duplicating fund purchased $4,500 in supplies. So this is the internal service fund, right? Oop. What happened here? What did I do? Oh, I don't know what I did. Okay, this is the internal service fund. The ISF. Doesn't it sound like a secret agency or something? Who do you work for? The ISF. Sorry, I'm losing it a little bit. It's past my most productive time. It's in the afternoon right now. I work best in the morning. So we got that. So we're going to have inventory. Inventory of supplies. And then we're going to have cash. And that's going to be for the $4,500. Easy enough? Okay. So let's try this one. So here we have number 7. Oh, I'm sorry. Got to go back up here for a second. This is the exact same entry you would do in both the ISF and the governmental activities. So let me see if I can take that out of there. Okay, so it's the internal service fund and the governmental activities. This would be the same entry. Number 7, we have here cash collections recorded by the general government function during the year were as follows. So number 7, we're going to hit the general fund. We got some cash, right? And we got taxes receivable. Current. So the cash that we collected was, we're not sure yet. So we got our cash, our taxes receivable current, which is the 1925, and then we have our program revenue. Program revenue, general government charges for services. Okay, and let me see here. Sorry, that shouldn't go there. Taxes receivable current, we collected that much, so we're going to reduce our current amount. I apologize for that. Oh, and then this is the revenues. Of 63,000. Which means the cash that we got is a 63 plus the 1925. So we got 1988 for cash, which incidentally is the year I graduated from Plattsburgh State, 1988. Fun facts. Then we have the general activities. We're going to have cash, right? Because we collected cash. Our taxes, receivable, current. And then our program revenue. Program revenue, general government charges for services. Okay. So again, it's going to mirror this up here because we're just copying from the general fund to the governmental activities. So we're just going to have our 1988. We're going to have our 1925 and the 63,000 right there. And again, that's all that was collected here. That 63 comes from where? It's the total of the licenses and permits and the user charges. So if you add the 35 plus the 28, that's where you get the 63. Okay, so I'll write that out for you. So 35, 1, 2, 3, plus 28, 1, 2, 3, and that equals the 63. Okay, and same thing down here. I don't know if there were any other calculations really that we've had to do. But if you do find that I'm missing something on here or whatever, let me know and I can throw something up to correct it or do whatever needs to be done. Number 8. During the year, the Internal Service Fund billed the city's general government function 15.7 for duplicating services that it billed the city's utility fund for $8,100 of services. So that's going to be start off in the internal service fund, right? What did we do? We billed the other funds, right? So it's going to be due to, due from other funds. And think about that too. Is it going to them or from them? Well, I'm billing them, so it's going to come from them to me. So they owe me. And then the second part of that is going to be the billings to departments. Now, how much is that for? Well, we got the 15.7 and the 8,100. So if we take the 15,700 and add 8,100, we get the 23.8 that we will use right here and here. Okay, hope that makes sense. Wow, I'm losing it, I'm telling you. So 8, internal service, fund due from other funds is that much. The other funds owe them. And billings to departments, that's their revenue. Now, if we go to the enterprise fund, we're going to have right here, it billed the city's utility fund for $8,100 in services. So if it's an enterprise fund, it acts kind of like a regular business, right? So we're going to have our expenses, and we're going to hit administrative. And then it's going to be their liability due to other funds. Okay, so they got the bill for $8,100 and they owe it. They got the bill, it's an expense, and they owe it. Okay, so think of this as in regular accounting, we would debit expenses and this would be accounts payable. So just, try to match up the similarities. And here this would be accounts receivable and this would be revenue. So that's number 8. Then we have the general fund we have to account for, which is going to be expenditures, general government, and then again this is going to be our payables due to other funds. So that's going to be the 15.7. So 15.7. So in the internal service fund, we did it all in one lump sum, the 23.8. And then in the enterprise fund, we expensed the 8,100, showed our liability. In the general fund, we expensed it, that amount that went to them, and then we showed our liability. Is everybody okay with that? Now we just have to deal with the governmental activities, which we're going to hit internal balances. And then we're going to hit the program revenue, general fund, charges, for services. Okay, so we have our internal balances, which is going to be for how much? 8,100, right? And then that's going to be 8,100. Okay? Because remember, enterprise funds fall under governmental activities. What about number 9? The city council decided to build the city hall at an estimated cost of $5 million. To finance the construction, 6% bonds were sold at the face value of $5 million. Contract for $4.5 million has been signed for the project. However, no expenditures have been incurred as of December 31st. So this is entry number 9. And this is going to be the capital projects fund, right? Because we're making a building, so that's going to be capital projects. We issued the bonds at face value. That means we got the full amount of cash. Other financing sources. proceeds of bonds, okay? And again, we got the full 5 million because we issued them at face value or at par. Now, if they say they issued it at 102, that means they got a premium because they got more money than they owe. If they did it for 98, that would have been a discount because we got less money than we owe, which hopefully you guys remember that from the earlier classes in intermediate accounting. So there's the capital projects fund. And then the next part is encumbrances. And that's going to be for the 4.5 million. Okay. And we have one more piece to that. I'm short a cell here. Not quite sure how, but so now we're going to talk about the governmental activities. Right now we did the capital project and the encumbrances. Okay, so for the governmental activities, we're going to say we got the cash and we have our bonds payable, and that is going to be for the governmental activities. Cash of 5 million because we issued it at par, and we owe 5 million. What a coincidence! We borrowed 5 million and we owe 5 million. Huh? Imagine that. Oops, and these need to go bye-bye. So number 10. I believe this is the last one for this. The general government function issued a purchase order for $32,000 for computer equipment. When the equipment was received, a voucher for $31,900 was approved for payment, and the payment was made. Okay, so when we originally issued the purchase order, we would have set aside $32,000. Okay, and this is in the general fund. And we're going to hit encumbrances. And then encumbrances outstanding. So our encumbrance would be for the $32,000 because that's the purchase order that we issued it for. We're expecting it to cost us $32,000. Okay, but now we have to record the disappearance of. We're basically going to reverse this right here. Okay, so we're going to have our encumbrances outstanding. Our encumbrances outstanding for 32. And then we're going to have our expenditures. Which is the 31.9. And then we're going to hit encumbrances. And then cash. Okay, so the other amount for encumbrances is going to be the 32 because that's what the original purchase order was for, and we paid $31.9. Okay, I hope that this made sense. It was a series of journal entries bouncing around from different funds, and I will see about potentially getting another one up. Okay, please let me know if you have any questions at all, and think happy thoughts. We're almost there.